Hey friends, welcome back to the channel. I'm Larry Fleischman, your real estate broker here in sunny Southern California. And if you've been following along, you know I love helping you make smarter, more confident decisions on your real estate journey. Today I want to share something that could be a game changer for some home buyers and sellers. It's not flashy, it's not widely advertised, but it might just save you tens of thousands of dollars on your mortgage. So let me take you back just a few months. A young couple that I was working with, we'll just call them Lisa and Eric, they were eyeing their dream home. Man, it was a gorgeous place. It had vaulted ceilings, and the kitchen, it was incredible. But the mortgage rates were hovering around 6.9%. And that made their monthly payment, well, let's just say it was tight. Well, then we stumbled upon something in the seller's paperwork. The home had an FHA loan with a 3.25% fixed interest rate from 2021. To make a long story short, we looked into it, we asked the right questions, and Lisa and Eric assumed that loan. They locked in a significantly lower rate, shaved hundreds off their monthly payment. And the best part, they walked into their dream home without breaking the budget. So Larry, what's this little known financing strategy? Well, let me break it down. But first, I have to remind you, look, I'm a licensed real estate broker, not a mortgage broker and not a loan officer. The information that I'm sharing is based on my experience in real estate. It's meant to help guide you in asking the right questions and exploring your options. When it comes to buying a home, it's critical to work with highly qualified professionals, especially when navigating more complex financing options like assumable mortgages. Look, I am always happy to refer you to a few incredibly knowledgeable mortgage advisors who can go into even greater detail and help you determine what's best for your unique situation. But always do your due diligence and make sure your decisions are backed by trusted experts. Okay, back to our topic, assumable mortgages. An assumable mortgage lets a buyer take over the seller's existing home loan. So the same rate, the same terms, and same balance. If that loan has a low locked-in rate, you inherit that sweet deal. Sounds pretty good, right? Well, it can be, but there are a few important things to understand. And well, let's talk about why this is a big deal right now. With interest rates pushing 7%, locking in an old 2.5% to 3.5% rate can save you tens of thousands of dollars over the life of the loan. Let me show you the difference in monthly PITI. That's principal, interest, taxes, and insurance, the payments for a $500,000 loan over 30 years at two different interest rates, 6.8% and 3%. As you can see on the screen, for an interest rate of 6.8%, your PITI would be about $3,880 a month. And for a loan with an interest rate of 3%, your PITI would be about $2,730 a month. That means that at a 3% rate, you get a monthly savings of about $1,150. Okay, so that means assuming the same loan amount, taxes, insurance, locking in a 3% rate instead of a 6.8% rate could save you over $1,150 a month. That's nearly $14,000 a year and over $400,000 across the life of the loan. That's more than just savings. It's cash flow that you can redirect to things like home improvements, investments, or simply peace of mind. Okay, here's the catch. There's always a catch. Not all loans are assumable. In fact, most conventional loans, they're not. The ones that are usually come from government-backed programs like FHA loans, USDA loans, and VA loans. Now, each one has its own rules and approval processes. So for an example, with an FHA loan, the buyer needs decent credit and must pay a small assumption fee, which I believe right now is capped around $500. But you're also going to have to take on the mortgage insurance. VA loans are a little bit different. If they were originated before March 1st of 1988, they're freely assumable, so no lender approval needed. but you do need to be a veteran or on active duty. After that, the lender must approve and the buyer has to meet certain credit requirements. For you buyers, the advantage is pretty obvious. A lower interest rate equals lower payments. But you sellers win too. Properties with assumable mortgages, especially those with favorable rates, tend to attract more offers and can even sell faster or for more money. In fact, I've seen listings with assumable loans spark bidding wars even in this market. But you need to be careful. Now, before you run out and start asking every seller if you can assume their loan, let's talk about risks. Let's say a home is worth $700,000, but the mortgage balance is $550,000. You're going to need to cover that $150,000 difference, either in cash or with a second loan. That's a lot more than your average down payment. And you have to check for some real pitfalls: unpaid taxes, deferred maintenance, adjustable rate clauses, or any other surprise costs that could be hiding in the fine print. Think of it kind of like buying a used car. You don't just look at the price, you inspect it, you check the title, and you run it by someone you trust. Most homes aren't advertised as having assumable mortgages, but that doesn't mean that they don't. You just need someone who knows where to look. Hey, you can check with a title company, the listing agent, or a professional agent like me. My team and I know how to review the loan docs, review assumable clauses, and help you navigate the process with confidence. Sometimes we even uncover them in situations where the seller is facing foreclosure or needs to sell quickly, making this a win-win for both parties. So, if you're looking to sell or buy a home in Southern California, my team and I would love to help you. And hey, if you're watching this from outside of Southern California and thinking, gosh, Larry, I wish you could help me where I live, well, good news. Even if you're not in my area, I've got your back. I have a trusted network of real estate professionals all across the country, people that I've worked with, trained with, and personally know. These are agents who share my commitment to putting clients first and treating people like family. So if you need help buying or selling anywhere in North America, just reach out. I'd be happy to connect you with someone who will care for you just like I would. If you're even thinking about buying a home and want to explore all your options, including assumable mortgages, I'd love to help. I can connect you with a great mortgage advisor, and together we'll help you craft a home financing strategy that fits your long-term wealth goals. Hey, let's make sure you're not just buying a house, but you're building a future. Hey, thank you for watching, and please hit that like button if you learned something new today. And don't forget to subscribe for more insider tips and to stay on top of all things real estate. And as always, if you need help buying, selling, planning, or just want real estate information, I'm just a call or DM away. Keep learning, keep growing, and keep making smart real estate decisions. Stay classy, SoCal, and remember, for all things real estate, sell or buy, Larry's your guy.